A profit and loss account, or income statement, is like a performance report for your company. It measures how well the business has done over a specific period of time, usually 12 months, and is often compared to your budget or the prior year to track progress as the year unfolds. At the top, you'll see revenue, but this isn't just business won or invoices sent. What you'll see here is recognized revenue, which is income that's both earned and invoiceable. It's up to you to decide when to recognize revenue, but the key is to stay consistent with your approach. Next, you'll see cost of sales or cost of goods sold. These are the costs directly related to your recognized revenue. Accounting follows something called the matching principle, which means any cost related to revenue must be recognized in the same period as that revenue. There's no room to pick and choose here. Doing so could give the impression of manipulating profits, which is a definite no-go. When you subtract your cost of sales from revenue, you're left with gross profit. To see how efficiently your business generates profit, divide gross profit by revenue to get your gross margin. It's always a good idea to check your gross margin against competitors in your industry to see how you measure up. After that comes operating expenses, which cover everything else. You can organize these in whatever order is most useful. You can group costs into categories or pots so you can track each as a percentage of revenue. Industry benchmarks can help here too. Keep an eye on the pot that represents the biggest percentage of your revenue. It's often the area where you can have the greatest impact on profit. When you deduct all operating expenses from your gross profit, you're left with operating profit. Dividing your operating profit by revenue gives you your operating profit margin, another handy number to compare against industry standards. Finally, deduct your interest and tax, and you'll arrive at your net profit. This is what's left for shareholders as dividends. Divide net profit by revenue, and you'll get your net profit margin, a key indicator of your company's overall financial health. Follow us for more insights into business finance.